Remember Michael Burry, the guy who brilliantly shorted subprime mortgages during the 2008 financial crisis? Well, guess what? He's back with a big new bet, and this time, he's got his eye on the stock market. But here's the kicker. While many investors are running scared, Burry sees value in an area they've been avoiding like the plague: the U.S. regional banking market. In Scion Asset Management's latest disclosure, Burry bought shares in 5 regional banks. And get this, they're some of the most heavily punished banks in the recent crisis. Curious, right? That's why you need to stick around till the end of this video. We'll dive deep into Burry's regional bank portfolio and uncover what he knows that you might not. Trust us, it's worth finding out. Michael Burry is the man that made a name for himself during the 2007 financial crisis, and he has continued to be a highly followed investor. His astute bets on mortgage-backed securities before the crisis earned him and his investors hundreds of millions of dollars in profits. Now, in Scion Asset Management's latest 13F disclosure form, which reveals investment holdings to the public, we find some intriguing information about where Burry sees value. According to the disclosure, Burry has bought shares in 5 U.S. regional banks, and here's the intriguing part. Some of these banks have faced heavy punishment in the recent crisis. The investment firm bought 850,000 shares of New York Community BANCORP, 250,000 shares of PACWEST BANCORP, 125,000 shares of Western Alliance Bancorporation, 184,900 shares of Huntington Bank shares, and 150,000 shares of First Republic Bank. Additionally, Burry acquired 125,000 shares of Wells Fargo. In total, Burry invested $18.7 million in U.S. regional banks. These holdings accounted for 17.5% of Scion Asset Management's portfolio weight at the end of the quarter, making it a significant investment for the fund. The largest position was in New York Community BANCORP, representing 7.19% of the portfolio, followed by Western Alliance Bancorporation at 4.15%. Interestingly, Burry is not alone in investing in regional banks. It appears that smart money is flowing into this sector. Investors like Bill Gates have also made substantial investments in banks such as PacWest Bancorp, while Citadel's Ken Griffin took a 5.3% stake in Western Alliance Bancorporation at the peak of the crisis in March. Professional investors entered the U.S. regional bank sector as retail investors left. Even Warren Buffett recently disclosed a near $1.0 billion investment in Capital One Financial. A notable example is Western Alliance Bancorporation, which has attracted numerous investors, including Burry and Griffin. The bank has provided regular updates on deposits and liquidity since the crisis peak, and each update has shown positive trends in the business. According to Western Alliance's latest update, the bank's deposits have increased by $600 million since its previous update on May 2, 2023. As of May 9, 2023, total deposits reached $49.4 billion, indicating a $1.8 billion increase since the end of the previous quarter. In fact, Western Alliance reaffirmed its outlook of attracting $2.0 billion in deposits in the second quarter of 2023. Which now seems like a conservative estimate. These deposit updates from Western Alliance suggest a significant improvement in the regional banking market since March. It was obvious that the regional banks Michael Burry acquired had a high percentage of uninsured deposits, making them highly susceptible to deposit runs. However, since the Fed made the reassuring announcement to backstop deposits, the risk associated with deposit runs has significantly decreased. Unfortunately, First Republic Bank couldn't weather the storm and failed. On the other hand, other regional banks in the US that Burry purchased are now being priced at significant discounts compared to their book value. This suggests that the market is expressing skepticism and anticipating potential failures in these regional banks. Meanwhile, Burry's decision to purchase these regional banks during a time of market panic and falling valuations could potentially be another valuable lesson he imparts to the market. We cautiously maintain optimism that the situation in the regional banking market is improving, largely due to the Federal Reserve's unprecedented actions in March, which provided emergency liquidity to U.S. depository institutions. However, we must acknowledge the possibility of further bank failures. Buying against the market trend, as investors like Michael Burry have done, does not guarantee investment success. For instance, First Republic Bank had to be rescued by the FDIC and was sold at a discounted price to JPMORGAN Chase. Other banks may face similar challenges. This leads us to the question, will there be a banking crisis in 2023? While the possibility of a crisis exists, it's important to understand the factors that play within the banking sector. Various challenges are currently being faced by banks, and if left unaddressed, they could potentially lead to a catastrophe. However, it's not all doom and gloom. Measures can be taken to mitigate the risks and safeguard the stability of the banking system. One approach is to implement stricter regulations in the banking sector. By doing so, banks would be subjected to more stringent oversight, making them more resilient to shocks and less prone to failure. Another strategy involves raising the minimum capital requirements for banks, providing them with a buffer against potential losses and reducing the likelihood of needing government intervention. It's important to recognize that a banking crisis is not an inevitable outcome. By taking the right actions and implementing effective risk management measures, the potential dangers can be minimized. Now, let's discuss the steps you can take to protect yourself in case of a banking crisis. But before we dive into that, it's important to acknowledge our respect for investors like Burry. However, it's crucial not to blindly follow their moves without considering a few important factors. First and foremost, keep in mind that Scion's 13F filings reflects their investments as of the end of March. Therefore, it doesn't provide an up-to-date picture of their current holdings. It's entirely possible that Burry's perspective on the stocks listed in the filing has changed since then. With that being said, let's now explore some proactive measures you can take to safeguard yourself if the potential banking crisis is causing concern. First and foremost, ensure that your investment portfolio is well diversified. This means spreading your investments across different asset classes such as stocks, bonds, and real estate, and more. By diversifying, you can reduce the risk associated with a single investment. If the value of one asset class experiences a decline, the others may help mitigate the losses. Additionally, it's essential to have an emergency fund in place. An emergency fund acts as a financial safety net, allowing you to cover unexpected expenses like job loss or urgent medical situations. If you find yourself facing unforeseen circumstances, having an emergency fund can help you navigate through them without facing severe financial hardships. So, staying informed, diversifying your investments, and preparing for unexpected events are valuable strategies regardless of the market conditions. If you enjoyed this video, what do you think about Michael Burry's purchase of regional bank stocks? Let us know in the comments below. With that said, thanks for watching, and we'll see you in the next video.